Everyone, welcome to Market Insight for the week of, for the week of May 13th through the 17th. So we'll start with the monthly as we usually do. And as we discussed last couple of months, in fact, the monthly is overbought in its uptrend channel. Last month in April, we saw more volume and more downside volume than we've seen since the monthly lows down here around 3,500. Thus far, however, the market continues to trend higher. The current May bar is only a week and a half into the month, and we've got another almost 3 weeks to go. So we can't make much of it, a low volume and the insideness of the bar yet. So we can continue to rally to at least retest the 53.33 highs or start reacting back down towards last month's low of 49.63 and potentially lower towards the box area where there's some significant support at both 4,800, 48.08, and then down towards 46.34, but that's quite a ways away from here. Let's take a look at the weekly chart. The weekly painted a third week higher of higher highs and higher highs and higher closes and higher lows. Even though the volume this past week was relatively low, we took out the high of the large down bar. I think it ends on April 19th, if I'm not mistaken. So the market is still reflecting some strength here, despite the low volume on the weekly chart. Let's take a look at the daily. And we see the dailies climbing up the supply line. We've had 7 straight days of higher prices. And this is, in fact, the longest stretch of up days, consistent up days or sequential up days in over a year. Is that right? No, not quite a year, since December of 2023. In any event, in these conditions, we can get a pullback that appears suddenly and potentially swiftly. So while we continue to grind up higher, Friday's close in the middle of the range, oops, let me get my pen here. Friday's close in the middle of the range suggests at least some profit taking starting to take place. So we want to be cautious of the upside here. I'll come back around to that in a minute and talk a little bit about that. But I think Friday's low will be key. That's 52.32, maybe down to 52.26 here, this high, the narrow range day there, high. But a break of that area is likely to take us back down to the beginning of that April 19th week, the week that we saw the downside accelerate below the downtrend channel, below the demand line, and push down and down and down to the lows of 40. So this day is April 15th, tax day, and the high here is 52.13 1/4. That's going to be a key level here. As I say, it started the accelerated run down to the April lows, and a break of this will encourage lower prices and a deeper correction, with supports, the first support at 51.88, and then we would extend this line over here at 51.55. Going below that, which I wouldn't expect, we would be coming into the, if we start heading down, then the vertical acceleration area in here, maybe around 51 and change, would be the test point. If we break this this downtrend supply line here, the daily supply line, then we're looking probably at the shell divers tragedy actually taking place that we talked about a little bit last week. So just to recap here, Friday's low is going to be important early next week. If we break that, most likely we'll be coming down to 52.13. Watch for the market to hold there because this was fairly significant. A break of that, and then the supports, we're going to see a deeper correction, and the supports then are at 51.88 and then 50. I don't anticipate us going all the way down below that, at least this week. If we do, then this supply line here becomes the old resistance, which got broken, becomes support, and this is vertical acceleration area in here, which we would likely see try to hold it at least. In any event, should we push up higher? Let's erase this and talk a lot about the upside. So if we can get up above Friday's high at 52, then we might, in that bullish case, we would see Friday's low hold down here, maybe some cause built intraday or over in the overnight, and then a drive up through Friday's high towards 52.80, 85, 88 area. Maybe as high as, I didn't mark these in, but this is 53, so somewhere is maybe in between these two. This is 52.85, excuse me, 52.85. So if we can drive up above Friday's high, then somewhere up in this area would be resistance. But I gotta say, keep in mind here that with 7 straight up days, the odds of continuing up are diminishing, right? We don't, and especially if we get 8 or 9 up days, then that area that I just highlighted and now just erased, the 52.85 to 53, maybe 5300, 5308, that would probably be pretty significant resistance. All right, let's take a look at the major markets. We can see all 3 major markets are overbought in their respective trend channels, with the NAS being the weakest. Notice that the NASDAQ, this is that April 15th high day, and it hasn't been able to close above it, but the other 2 markets are above that, right? So unlike the Dow and the NAS, unlike the Dow and the S&Ps, that April 15th day becomes really important. So watch the NASDAQ. If it's unable to get above that, then we're likely to head down and see lower prices. So for the coming week, we have our normal deep practice on May 16th, Thursday night at 8 o'clock. And I just want to remind you, Ellen's meditation classes that she's going to start in June, I think, and go through each week in June. She'll be sending out an email this weekend about that. And so look for that and check that out if you're interested in learning about meditation and mindfulness. Everyone, thank you, and I look forward to seeing you on Thursday. Have a great trading week. Enjoy the rest of the weekend, and we'll see you in deep practice. Bye-bye now.